If we know that the market has traded from the high here lower, what is the lunch hour going to do? It's going to run on what? Buy stops. So buy stops during the morning session, where would they most likely be? Well, you have this here, but we don't have a whole lot of interest in something so shallow like that. Also, what did I tell you to look for throughout the entirety of the week? If there's an opening gap on Sunday, you extend that through the entire week. So are we interested in just running these here? No. What high is between the gap that's formed on Friday's close and Sunday's opening? This high here. That's the morning high. Why? Why am I going to pick that? Because it has to do with that weekly gap opening. The market's going to want to do what? It's going to want to draw back into that. So who's making money right now at this time of looking at the chart right here? Shorts. So where's their stop? Yes, they're right here, but more specifically, they're right there because this high is forming when? At noon. You're already in the lunch hour. That's not a high that runs the AM session high. I'm not saying the highest high. I'm saying the most recent high. Because why? Think, folks. Think. As the market's dropping, if they're short, what are they trying to do with their stop loss? Jam it down to the next relative high because they don't want to see that high taken, so their stop loss is going to be put just above it. So that's why you're going to focus right here. When you're looking at price, you have to think about who's in that trade. How are they managing that trade? What is the worst case scenario for them on a nightmarish level that if they think it's going to keep going lower, say in their mind they think it's going to go to 4,000 even. I'm not saying that, but I'm saying that there's traders that think that kind of stuff all the time. They don't want to see their high taken out. Even though they have their stop loss there, they don't think that's going to happen. Well, bring in the lunch hour. Here's the noon hour beginning. That's that short-term high. I said we're not interested in that. We're looking at that high here. So this high has AM session buy stops. So between noon and 1 o'clock in the afternoon, all of this movement here, this is a high resistance liquidity run too. It's a lot of roller coaster ups and downs, ups and downs. And where does it go? Ultimately, right where I mentioned, we'd see logically the AM session most recent high that would be considered a high for trailed stop losses while the market dropped in the morning session. So the buy stops that are resting above this high here, we run through that. Where? Post lunch on the other side at 1:30. 1:30's here. We're missing it by, that's a minute or two. One more time it runs it. But look at this high here. Go over to this volume imbalance right there. This candle's opening price, which is the low of the volume imbalance. That tick is the very tick high of that candle right there. So how far can it go above this high to run the stops? Well, look to the left up. What do you see? You see this wick. Consequent encroachment is just above that. That's not reasonable. If it's going to run there, it's going to run a little bit higher. So that means it's going to go above this. So what's above that? Volume imbalance. Bam, hits it.